What is up, everybody? Welcome to the Russell Journal. I am Russell, and this is my journal entry for today, Sunday, October 16th, 2022. I believe it's the 16th. It might be the 15th. Anyway, we have a very, very big week up ahead of us. We've got some economic data coming out. Big news this week is we get the real kickoff of earnings season kicking over. So there's really a lot. The markets are in a state of really, really bad turmoil, where you're down a lot, and if earnings really disappoints and earnings guidance disappoints, we are looking at the possibility of a capitulation. On the other side of it, there is a possibility if that guidance doesn't disappoint, if companies can give a good story going forward. It is possible we will see a really big, you could see a big short squeeze happen. Right now, this market is really heavily shorted on the short side. You have a lot of guys who shorted in the hole. Wall Street loves to punish, the market in general loves to punish anybody who is on the short side of this. However, right now, diamond handing your puts has been seeming to be something that's paying off. So, with that being said, we're going to go ahead. We're going to go over to the futures. We're going to take a look at that for the week as far as our trade plan goes. And here we go. Okay, so as you can see, the Dow is up 100 points already. NASDAQ's up a little bit, and so is the S&P 500, right? We'll see how it holds through the morning. And we'll pair this a little bit with what's happening in the technical analysis. We should have a small amount of short covering coming into the beginning of the week. If traders trade the way that I have been taught that they do trade, we should see that. Let's go ahead and take a look at the economic data coming out this week. You can see there is some economic data. We have some producer indexes, some manufacturer indexes coming out, a little bit of Fed president speaking. Not a whole lot to be super concerned about. However, that North American home builders that comes out on Tuesday is going to be, it's going to be a pretty key issue for us to look at that. What the home builders are doing is really going to set the future for the inventory. Right now, one of the things that is slightly saving a lot of the problems in the housing market is the shortness of inventory, okay? We have seen a correction in Seattle where I live. We've seen almost a 15% correction in housing prices, but the Fed is still going to hit us with another 75 basis point rate hike. You can usually count on the basis of any mortgage to be at about 3% above the Fed funds rate. So we're going to start climbing with that Fed funds rate up over 4%. That's going to put mortgage rates in there at 7-8%. So we will see what the market can bear, okay? That being said, even with that stuff, we don't really get that until November 20th. So we've got some time, but what can happen is if those home builders are not building, or if they're dialed back in building, you could see some stabilization within the home prices just from the tight inventory. And that will have some effect on the market. Remember, everybody right now is looking at this thing to go all 2008. And so what they are waiting for mortgage-backed securities to fail, right? They're waiting for foreclosures to begin to spike. Now, again, there's a lot of stuff in place that's different this time than last time. You can have your house foreclosed on and not be homeless for like at least a year, thanks to some of the stuff that Obama put in place and things like that. So as far as that goes, let's go ahead and go over and look, though. The big thing that we will be looking at is the earnings. As you can see over here, we have the earnings coming out this week. I will step out of the way so you guys can see what is up there. If you are interested in this graphic, you can get it on Twitter or on Instagram from Earnings Whispers. I go to these guys a lot. They're really good about putting these out. Really appreciate the work those guys do over there. You guys should definitely go give earnings. No affiliation, by the way. I'm not affiliated with any of these guys. As you can see, hold on. So the big ones to look out for: Netflix, IBM. IBM's going to be big, right? In whatever they're doing, it's going to really set us up as far as like what is happening with the IBM's going to set us up for kind of some of the stuff that's happening within the semiconductor sector. If we see IBM having some sales pullback, or we have, any of these guys who sell any personal computers or anything like that, see them pulling back, we might actually begin to see some relief in the chips, in the chip shortage, which could allow for some alleviation in some of the other sectors like automotive and things of that nature. So really, IBM, Netflix is a big one. Everybody is really kind of watching Netflix, especially because Netflix just put out this new ad-based subscription service. So that's going to be a really big one. Give me a quick second. What else is here? There was a bank on here that I thought. Yeah, that's First Bank is not really that big a deal. I thought. Oh, here. Oh, tomorrow. That's the one. This one. No, back over here. Bank of America on Monday is a big one. And what's this other one? American Express. These two, American Express and Bank of America, are going to be really interesting to see. First of all, we had Jamie Dimon come out, CEO of JP Morgan Chase, last week, and he basically just painted this grim picture, helped kind of murder any rally that was going to be had in the stock market, thinks there's another 20% downside to the market. I'm not here to say I don't forecast like that. I'm just becoming a chartist. So, but he seemed to think there's another 20% downside in the market. I don't know. Traders going to trade, and I have to operate based on how traders operate. So, but so the two things to look out for: American Express. American Express is going to be a very big deal right up here. Where are we? Right here. There it is. So American Express is going to be a big deal. Part of the reason American Express is going to be a big deal is because in order to battle the inflation, right, the consumer still has stuff to buy, right? Like the Fed is trying to kill spending, right? That's what the Fed is trying to do. But you still have to buy stuff. And the way a lot of Americans are buying stuff right now is on credit. So if American Express shows if they show some bad stuff up here, there's a possibility that we will begin to see that credit crunch, and you'll see some tightening in credit. If Americans are backing off of the use of credit, this could be good for our sort of inflation peaking story, which is something that we want to see. So from that, let's go ahead and jump into the charts. I don't trade most individual companies at this moment. So the one thing, again, really want to see what the picture is for these industries that make up the S&P 500, okay? So as you can see right here, okay, now I'm going to move out of the way. All right, so you can see this is basically a 5-minute chart of Friday's action. You can see all of this selling that kind of happened all through here. And it just kept going down. It was merciless, right? It was just I mean, honestly, like it was like crashing, and then it just kind of turned into a meltdown. And now the good news is that we will see it come up a little bit. If the futures open higher, we'll be able to see some move up. Let's go ahead and go to the daily chart though, and take a look at. Let's do kind of our regular sort of thing here. Okay, let's delete all of that, those lines that are on there. We don't need any of that. Yeah, we're going to get rid of all of those right now. I don't need any of that on here for you guys. You don't need to see it. Okay, can we get rid of the drop-down menu? All right, so here you go. You can see basically same thing from Friday. Trend down, bias down, and you can see momentum is down. One thing about it is you don't have momentum down here, is not embedded. So really what should be happening is that traders should be stepping out of, let me see this really quick. Okay, so. That's the first thing. Then let's put the Bollinger Bands on. That'll give us some more clarity as to what is actually happening here. Okay. And I don't know where my stochastic is. There we go. There we go. We're money now. All right. All right. So you can see trend down, bias down. We're underneath the middle, the median, underneath the middle Bollinger Band, which is basically the 18-day moving average. I don't have it set up on here. I'll explain that some other time. This, and then you can see you're down here. You're at the lower Bollinger Band. Okay. So if you're short this market without an embedded reading, you should start to cover here. Okay. Now they may be hanging in for some more because they might try and take it back to the 200 MA, which is down there at the 200 MA is basically down there at about 248 or 348. I'm sorry, 348. And so there may be some hope to kind of come down there and hit that price target, especially because with this price action from Friday, we will see an expanding of these Bollinger Bands in the morning. So we will have kind of we'll have a wider angle there. So there'll be some lower price targets down there. But basically where this is that without getting some sort of short covering, there's no way for us to really place a trade here. There might be some scalps to be had if there is short covering, but we need another move up, kind of like we got last Thursday, in order to really place a solid trade. So what we will be looking for is a move back to the median. We'll be looking for that. And then based on how it gets there or if it gets there, really whether or not we put on a put position or not. Let's go ahead and look at the VIX right now. I'm going to go over and check out the VIX for you guys. And one of the things that we've noticed throughout this year is since about, the first third of the year got done, the VIX has really not responded. The VIX has not really responded to the market, right? It's like everybody kind of been through this a lot of times before, kind of knows what to do. The beginning of the year happens, they ran out, they bought VIX calls, and ever since then, like the volume of new options being put on the VIX is not a lot, right? The volumes are low. Again, some of the stuff that we do want to notice of is, again, our trend is up, our bias is up, and as I said before on Friday, we are definitely flying in breakout formation. What we will look to see happen for a real breakout here is we will look for a pullback, right? A deep pullback. We will look for it to take out one of these lows and then turn around and go back up, okay? And then you'll see that is your real breakout in the VIX. The thing that's interesting about that is hopefully that happens. That will give us a chance to put on our short position later this week. Is we get that pullback, that nice pullback in the VIX, and then we'll get a chance to enter our short position and then look for that rally up over 35, okay? Really, really, really key for us on the bear side. We're looking for it to get over 35. Now, I'm going to say this really quick. From a humanity perspective, I don't want people getting wiped out. So it is, yeah, it'll be nice to make some money on capitulation. But trust me, I empathize with everybody who is financially hurting because of these moves in the market. I am not a soulless guy. So we're going to go ahead and check out the DXY, the dollar. This is really going to be something that you can click that little arrow. Okay, so here we are. We're in the DXY. Again, trend is obviously up. Bias is obviously up, right? Coming into today, dollar down a little bit, okay? So what we're looking for here in the dollar is we're looking for the dollar to give some of the other markets a little bit of relief, okay? A strong dollar means a weak pound, it means a weak euro, it means weak yen in Japan and in China. So really what we want to see is we need, those markets could use a little relief. Now, I have done some research because they are a lot of guys talking about the dollar shortage. It is not what I thought it was. I was under the impression that it's like, hey, there's not enough physical dollars for people. The problem with the dollar shortage is that they're apparently just dollars aren't available right now at the price that they want to pay. So even though the Fed is unwinding the balance sheet, if China does start dumping some USD, and I think they have been, but they've been preparing to sort of do that, it could give us some alleviation and allow for a bounce in the stock market, right? Again, not something that we're looking to be bullish on. It's not something that's going to just make everything be good or be great, but it will give us a chance to put on some better short positions, some better hedged positions, things of that nature. So that's all kind of what we have. So again, just to recap, again, a little bit of economic data coming out. Really, it's going to be pretty chill until FOMC in November. That's going to be looking really hard at those earnings. Going to be having the scanner up on my earnings, going as far as that stuff goes. Going to be a really big deal. Looking for this pullback in the dollar, looking for the pullback in the VIX before they really ram it down their throats. And again, I don't think that guidance can be good. I don't think that earnings guidance can be good. I think that those earnings projections have to come down. It's hard to say though, because banks tend to do good, right? They tend to have really good earnings in inflationary environments. And the other one who does tend to do good is, companies like Walmart, and if you look from last week, Pepsi just had like stellar earnings. So, and gave stellar guidance going forward. Now, they might just be eating some of Coke's lunch, right? That might just simply be it. Their earnings might just come from like, hey, we're just becoming a better company than Coke. So you're not really seeing a market sector growth. You're just seeing a market sector kind of getting taken over. So we don't really know. What we do want to see for the inflation story is, again, we want to see that guidance come down. We want to see those earnings come down. We want them to be less. And again, we're looking back up towards that 18-day MA to get short on this market, or we're looking for the slow stochastic to sort of embed on SPY to put on a short position. That could also happen. So anyway, for the Russell Journal, I am Russell. This show is written, edited, hosted by Russell. We are produced by in conjunction with Social Media Shows. Our executive producer is Maria Pureza. Give Social Media Shows a try. Check them out. It's not an affiliate link. I don't get paid or anything if they do. On your way out, do me a favor. Make sure to hit the like button and subscribe to the channel. And until tomorrow, pretend I said some sort of catchphrase.